Hey, what's happening? Trader Tim here from EminiMind. It's February 21st. Going to run through the trades from this week here in the ES. From a daily perspective, we really didn't have a lot of directional movement. Today we have moved down so far this morning, only a couple hours into the trading day, but otherwise we really just kind of went sideways along the high of last week. And if we look at the fib retracements, we can see the downtrend line that I have drawn here, and then the prior 50% retracement hit its target earlier this week, and then we've pulled back just ever so slightly today. Yesterday we formed a hammer, we pulled back intraday and almost tagged up on the 50, and then today we're kind of trading right at the 50% right now and that 21 EMA. So a couple of larger 50% retracements below us. I know it's a little bit cluttered here with all the retracements on there, but we've got the larger one and then the prior one that hit the negative 23. We'll get rid of that one. And then the most recent one here, that's 60.95. And so that's pointing to a 6,200, and then the larger one just below it points to 62. We'll call it 62.50 just for round number purposes. So that's kind of where our targets would be for next week. If we close today by breaking the 61.8, which is a 60.78, we would basically be on the other side of the downtrend line. So we were kind of knocking our head on the downtrend line. That was acting as resistance. If we close a little bit lower at the 61.8, we'd be right on top of the downtrend line. So that's going to be a key level, 60.78, and most importantly, a close below that price. If we dip below it and then rally, kind of like we did yesterday with the hammer, then that's okay as long as we close above it. So watch that level this afternoon. If we close above it, we should be able to lift off higher into next week. One thing you probably noticed this week is that we had a lot of one-to-one breath ratio days. And what that means is we have a volume ratio. That's what the breath, that's this box on the bottom left here. The volume ratio of volume going into up stocks versus down stocks. So if it's 5-to-1 and it's positive, it would mean there's 5 times as much volume going into up stocks versus down stocks. Well, when we're in this 1-to-1 range, 1.3, right now we're at 1.5 to the negative. It doesn't really matter if it's positive or negative. Anything inside of 2-to-1 or anything that starts with a number 1 is going to be a little bit more balanced, and we can see by our value area from, this would be based on the prior day. So when I'm putting the value area on my chart, I'm putting yesterday's value range here. This is where most of the trading took place yesterday. Those numbers go on my chart for today. So these value area prices correspond with yesterday's value area. So moving into today's trading, I have kind of a range of where most of yesterday was spent. And if we look at both the value area and the 30-minute range, those two are really helpful to indicate, are we range bound or are we going to be trending? So today we have a little bit more trending action. We're just now getting below the value area low, and the 30-minute range also happens to be above us a little bit further away. If we go to yesterday, we were kind of right below value area, the 30-minute range for most of the day, kind of just below and just above, kind of moving sideways, and then into the close, we traded back up into the 30-minute range. If we go back to Wednesday, we got a little bit more trending to the upside. 30-minute range was way down here, and we got some trending. So as soon as we move out of the 30-minute range, we want to see how strong is that move, and can we stay out of the 30-minute range? And then going back to Tuesday, essentially the first trading day of the week, really sloppy, messy day. This was the opening 30-minute range, and just spent a lot of time inside of the range during the morning session. Poke down in the afternoon and then rip through it right at the close. But by and large, when it counted in the morning, we were trading just right through the 30-minute range. So the 30-minute range and the value area are pretty helpful for getting some kind of baseline to start the day. Obviously, you can put the value area on your chart before the NYSE opens, and then once you get 30 minutes in, you can add in the 30-minute high and low. So today, I had a inverted hammer short. We had this, pretty clear downtrend on the 21 EMA. Kind of came into the day intending not to trade, seeing that one-to-one breath, but then had this inverted hammer short here about 40 minutes into the day, and that one traded right here, right at the 21 EMA, and then got a nice little kick down, and then only went a couple of bars, and so that one was 2 3/4 points, just exited above that little spinning top there, trailing my stop down on the way down. Interesting thing to note about this trade is yesterday I had a nice 10-point winner, which we'll get to in a minute, and that was also at this exact same time, 8:10, so 40 minutes into the day. And so I do find during the week, sometimes you get, cluster of winning trades occurring at the same time or very close to the same time. So something to pay attention to early in the week, Monday, Tuesday. If you see your winners are happening, 45 minutes in, pay attention later in the week at that time frame, and you might see some more good trades come about. So yesterday was a pretty good day. We did get a plus 20 on the 15-minute opening range breakout. So that one broke to the downside and then got its plus 20 pretty quick. Tuesday and Wednesday were -4 stop outs. So small, modest gain on the 15-minute for this week. And then 1 minute hammers and inverted hammers. I had 734 was the first one. That was a long. That was going back. That was kind of early. We had a gap down. Let's see. Go like here so I can give you some context. So this was yesterday's trade, a little bit of a gap down. And then if we zoom in, 734, I thought we might get a bounce off of the move down. So I took the little long above the hammer there, and then that one got stopped out on the next bar for minus point and a half. It was a small candle, so I didn't feel too bad putting the risk out there. But then at 8:10 was the larger long, and this one was a higher low. So we had a low NYSE tick of the day here and a low price of the day. We bounced, then we pulled back and we put in this hammer, which I put an order out, but then we broke its low right here. And so then I deleted it. But also notice that we were at a 50% retracement long here. So we had the low tick of the day, pulled back to the 50, and then we got this hammer forming, and its tail made a new low. And then that's where I took the long, one tick above highs here, and then trailed it behind each candle, ended up getting out on this inverted hammer. When we have these inside bars like this guy and this guy, they're inside because the candle here, its high and low encompasses both of these two candles. I just leave my stop down here. So the stop would stay here, these two candles form, and then once this candle breaks this high, then I move it up underneath the next candle's low, and then finally here is where it got taken out over on this bar. So that was a nice 10-pointer. And then I took one more little short. Actually, that was the reversal here. I took I got out and then reversed short, and that was the 821 bar. And then that one, it did get a nice move off of this red candle, but then just like I mentioned with the inside bars, I had my stop above that candle, and we just kind of crept up, and then it took me out. We weren't able to break lower and get my stop tighter. So that one was a little -1. So I ended up about 8 points in hammer and inverted hammer trades on the day yesterday. So that was a pretty solid day. We haven't really had a lot of traction with, a lot of 10, 15-point trades. Haven't got a lot of plus 20s on the 15-minute, but sprinkled in here and there. And that kind of is a reflection of this one-to-one breadth. And same with the advanced decline line, the box on the right here. When that is, down near plus or minus 400, you're a lot flatter. You're not getting as much momentum. I mean, even today, this is kind of our biggest trend day we've had so far this week, really. Yesterday, the first two candles were down, but today we've got 1, 2, 3, 4, 5 red candles, and now we're kind of pushing our way up. So the next thing I would do here is draw the full halfway back from today's high to today's low and see how we react at that point. The 30-minute low is going to be just above it here at 61.13, and then the 50% on this daily halfway back is right now 61.10. So watching that level for a turning point for a reversal to push us down, possibly kind of for a next leg lower. Otherwise, from a daily perspective, like I said earlier, as long as we hold the 61.8, 60.78, then there's, nothing has changed with the larger daily trend. So sometimes we can get caught up intraday, especially if you're looking at like a 512 tick chart or the 1-minute chart, and you can get caught up with the smaller trends that are forming. But then when you back out to a daily chart or a weekly chart, the larger picture hasn't changed. So it's helpful to keep an eye on the bigger picture at least once a day, when you start the day, starting on the bigger time frame and then going down to the smaller time frames. So hope that helps, and hope you have a great weekend. We'll talk to you guys all soon.